You ever meet one of those traders who keeps it low key, but you just know that they're cooking something serious behind the scenes? That's today's guest. For years, he's been grinding the corporate world, suits, schedules, and ceilings. But eventually, he decided that he's done playing someone else's game. He stepped into the chaos of the market, and for the last 5 years, he's been carving his path one tick at a time. We first crossed paths in mutual trading circles, and while he keeps his face out of the frame, his persistence, unmistakable. He trades treasuries. I'm in the gold lane, but we both speak the same language, Dom flow. Jigsaw heads know what I mean. So today, we get into the mindset, the grind, and the method behind the quiet killer in this trading game. Let's get it. All right, guys, what is happening, traders? We are back, and we have a special guest in the house today, the CFT, Canadian Futures Trader. What is happening, man?
Hey, Woods. Thanks for having me. I'm glad to be here. This is always fun.
Hey, man, I am excited to have you, man, because I see how you're growing, and man, your knowledge is, man, let's talk about it, man.
All right, let's do it.
So tell me, how did you first get into day trading, and what inspired you to pursue it seriously?
Sure. So it was about 5 years ago now. I got into futures trading. So like circa 2019. Um, it had always been something I had a general interest in, but I just never pursued it. I came up through the corporate world, the corporate ranks, accounting and finance. I was chief financial officer for companies. So like I always had like an okay job. So I just didn't need to, but it was more out of interest. But then um, I kind of get bored with stuff. So I transitioned out of being, like corporate stuff into consulting, did that for like a decade and then got tired of that. And it was just kind of a good point where I lived most of my adult life in the US, even though I'm Canadian. But in 2019, I decided to move. Well, probably before that, but in 2019, I actually moved back to Canada, be closer to family, stuff like that. And then it was also just a good time to be like, okay, you know what? I'm kind of done with this consulting stuff. It's time for the next thing in my life. And somehow, some way, I was like, you know what? Maybe it is time to pursue that, that nagging, thing in the back of my head that I always wanted to kind of try out trading. As for futures, definitely was not like something that was like top of my list. Like it just wasn't on my radar, I guess I would say. But when I started researching just day trading in general, nothing was really staking. I was like, stocks, options, okay, crypto. Not like I'm into crypto, but not in a day trading sense, more long term. Somewhere in there. Oh, sorry, there's no short story with me. I always talk around it, but I would say long story short, but I know full well it's not a short story. I stumbled on some videos like when I was researching on YouTube, and there were futures videos. I was like, hang on, this seems pretty cool, and just went down the rabbit hole. And fast forward 5 years later, here we are. So yeah,
Man, so somewhat of the YouTube University caught your eye.
yeah. Seriously, yeah, it was just I wish I could remember who. Like I don't remember what like the first futures video I stumbled on, but it really just started with like day trading techniques and stuff like that, and looking at charts and blah blah blah. And somewhere in there, stumbled on, I believe it was at least crude oil or something. I was like, oh, that sounds fun. So, and that's
Wow.
where it started. Yeah.
So, like, tell me, what were some of the biggest challenges that you faced early in your trading career?
Um, for me, and some of these, I mean, the biggest one that I face that people probably don't face as much these days, or maybe they do, was just there was real lack of information on futures trading in general back
Mm,
when I started. And that's honestly, I mean, I'm probably jumping ahead, but that was the genesis of my YouTube channel stuff. Was there was no or very little information. So I started creating information once I had a bit of knowledge. But there's a lack of information. The other thing, more like trading related, was just, I mean, one, I was coming in like fresh, like green, like no real experience. So like everybody, I had that, I always forget the term where you learn a little bit and then you think you're an expert all of a sudden. I definitely suffered from that as well. Whatever that phenomenon is called. But So there was definitely that. I think the other thing that kind of worked against me was, so at some point I studied for about, I don't know, 4 to 6 months. So I'm like watching videos and figuring things out, and like, okay, this is, the different products, and here's the hours, and here's how the charts work, and blah blah blah. So once I got into it, I went with I mean, back in those days, there was only a handful of futures funding companies, and Top Step was top dog. I mean, they're still huge, but so I went with Top Step, and I passed my very first evaluation, which was probably a curse because I
Wow.
felt like, oh, this is easy, no problem. I just passed a 50K ML, like I'm great. Fast forward, 2 weeks, and I've blown it, and I probably cycled through 10 more evaluations, and that's when it really hit, like, this isn't as easy as it is. So I mean, lack of information, suffered from just as well. Like learning all the stuff was a huge challenge. And then kind of quickly realizing it's not nearly as easy as it seemed.
Hmm. So like, tell me, can you describe a turning point in your trading journey? Like, when did things start clicking for you?
Yeah, definitely. So it took, so the other thing, and it's related to this answer, but I had read or I'd heard on YouTube or whatever, like it's like everybody's like, it takes it a minimum of a year before you become good at, trading. I was like, whatever, I'm good. Um, so of course I quickly realized that's not true. It literally took me almost like basically a year to the month before I kind of turned a corner, started becoming profitable, at least started having enough success. I'm like, okay, I'm going to stick with this. So there was definitely that year point, but I would say definitely a huge, huge turning point for me was probably, so from the point I started trading until the year, about 6 months. Sorry. So from when I actually started trading, about 6 months in, floundering, not really having a ton of success, a few hits, but nothing, it's definitely questioning if this was for me. But I knew I wasn't having a great time with like charts and indicators and stuff. Like it just wasn't clicking. I'm like, I can look at a chart, I can draw the indicators and all that stuff, but it just doesn't feel like it's what I'm meant to do. Somewhere in that journey, and I love researching stuff on YouTube. I can spend all day on YouTube, like looking stuff up. I stumbled on a trader. His name is John Grady, and he traded differently. He traded, for one, he traded the Treasury products, whereas most people were trading, ESNQ, maybe crude oil, stuff like that. So this is the first guy I found who was trading Treasuries. And second, he used depth of market, and he used Jigsaw Day Trader as the software. And I
Mm.
watched some of his stuff, and I just really liked his personality too. He's very calm, collected, wasn't trying to sell anything, really was trying to explain stuff in a very, like, I don't know, methodical way. And it
Mhm.
just like I latched onto that. Like that spoke to me 100%. The depth of market spoke to me. It just made way more sense to me. So I went down that road. It was almost like not necessarily completely relearning. Like I still had all the fundamental stuff of futures and pricing and hours and blah blah blah. But the depth of market is just a completely different way of trading and using order flow and trading the different like the treasury products, which have like a deep order book, but they move, like snail's pace compared to equities. So um, I latched onto that. That was definitely a turning point for me because I haven't looked back. I got Jigsaw. I studied all of John's stuff. And I've been trading treasuries, since like 4.5 years now. And it was pretty cool. At one point, it was about 2 years ago. I got to interview John, and I interviewed like a few. Like I'm not a big interview type of guy, but out of the few interviews I did, most were like, okay, whatever. John was the only one where I was like almost a little starstruck, right? And he was like, for him, it was like, I'm just a guy, like a trade. I'm like, I know, but like my entire career is like formed by just the stuff you put on YouTube, like you don't even know. So that was pretty cool.
Wow. It sounds, it's just from talking to you, you sound young, but yet also seasoned at the same time.
um,
Like, so I'm wondering, how do you balance your trading with your personal life, especially on days with high market volatility?
sure. I'm thank you, first of all. Definitely not young. I mean, I'm 50. It's no secret. Some people know. You know. So um the I'm kind of um what do I say? I definitely have a different approach, I would say. Another thing that, again, this all ties together, don't worry. I'm not go off on these tangents, but another kind of turning point for me, and it ties into the answer to your question you just asked, was I definitely used to be the type of trader, and I see this in most people, and there's nothing wrong with it, but I wanted to trade as much as I could. Like I'd trade the evening session, I'd get up first thing in the morning, I'd trade all morning, eat lunch, trade all afternoon. And by the end of the day, I'd be worn out from it all. At some point, I just kind of broke away from it. And I was like, you know what? Realistically here, especially with the treasuries, the overnight is pretty much dead. The evenings are completely dead. And even the afternoons are slower than the mornings. I mean, I think it goes for a lot of products, but the treasuries, which I was trading. So I was like, you know what? I'm going to try just trading the mornings. And that was a tough transition because I felt, and I've seen this and other people write this, like if they're not, like it's hard to step away. Like you feel like you're missing out on the action, right? So it took,
Right.
that was actually like another challenge to overcome because I really did feel like it was difficult to turn off the computer and go do something else when I knew the market was open. It's like 1 p.m. and I'm out grocery shopping and I feel like though, maybe I'm missing out on something. So, but I kind of fought my way through it. And over time, not like a long time, but over like a month, say, I finally kind of condition myself to just be okay with like just trading X amount of hours, like usually. And I kind of tailored it down now to where I trade 8 a.m. The Treasury US session starts at 8:20 a.m. Eastern time. So I start about 8. I go till like 11:30, just depends on how the action is. And then that's it. Like I literally call it quits. So as far as actually you're answering your question and managing my time, I literally trade for 3 to 4 hours a day. I've just kind of gotten it to that point. It's been that way for like a couple of years now. So it's definitely been nice. And then those days when it's completely like hectic or there's news and stuff like that, I'm pretty conservative, I guess. I just like sit back and watch and see what shakes out. Like I don't feel that need to trade like every day. And it's been really good because again, I'm not like everybody do what works for them, but I know for me, just that balance of like trading and living a life was helpful because it made my trading more focused. I'm concentrating on the hours when there is the most activity so I can get the best of it. But then it's okay to like put it down and kind of move on with my day. So that's kind of just what I do. Yeah.
That's amazing because it sounds like you've mastered the battle with FOMO.
Oh yeah, absolutely.
Right.
And I mean, I'm not trying to like brag or something, but yeah, no, I just don't feel it like at all. Like it really has become, and I think what helped was just seeing, like doing what I did, like moving to just like a shorter trading day for myself and stuff, and getting like some hobbies and stuff. It worked. Like it actually worked. It wasn't like, oh, I did this and now I'm making less money. It was like, no, I did this and now I'm more successful. So that was the right move for me. So yeah.
Wow. So let's talk about your primary trading strategies. How did you develop it?
It goes back. So it definitely did start again with the John Grady guy. And he's still around. He doesn't really put out content. I mean, he hasn't in a good while, but he's still around. It started with his strategies. I kind of took those and then modified them to kind of work for me. Like I just kind of refined them. And one thing that was the case was he trades mainly the 5-year or at least in the old days, like the videos, he trades the 5-year and 10-year treasuries. And I was focused more on the 30-year ZB and the Ultra bond, which is also a 30-year bond. And so they move relative to the 10 and the 5, they move faster. They definitely are not fast moving products like NQ. People laugh when I refer to Ultra bonds like fast. It's like not fast compared to other stuff, but it's the fastest moving treasury. So I had to kind of adjust like his little techniques. And then as far as like what they are, I mean, if you've so I'm trying to think of how to explain it without I'm trying to visualize it in my head. Because I'm using the depth of market and because the treasuries have a very thick order book, meaning there might be, let's just talk about ZB, 30-year. There might be several hundred contracts on the bid and several hundred contracts on the ask, like 400, 500 on each. I can sit
Yes.
there and watch it,
Right.
and the numbers are changing. And Jigsaw is also showing additional information that like your standard DOM doesn't have. So it's showing if buyers are coming down and hitting the sellers are coming up hitting the buyers, if people are just pulling their orders, stuff like that. So you get a sense of who, that tug of war, who's a little bit more
Right.
in control. And really a lot of it is, speaking of, patience and NOFOMO, it's also just, the day-to-day of it is just a lot of watching the depth of market and it kind of absorbing what's happening, and then looking for when there's a bit more of an obvious, the tug of war is going to definitely go one way. As far as like the strategies I use, that there's mainly two. Like I kind of I don't want to say I developed, but there was kind of 3 or 4 that I used to use. Now it really is like I look for 2 things. One is a big correlation. There's usually a big correlation between the 30-year treasuries and all the treasuries, honestly. But I'll watch the 30-year and the 10-year. And when they get kind of out of whack, like say, for example, like the 10 years are pushing the high of the day, but the 30 years are still kind of just hovering. They're moving up, but maybe they're not quite pressing the high. But I'm seeing a lot of movement on the 10 years. And it looks like the 10 years are just going to continue to press their high and make new highs and stuff. 30 years aren't quite there, but I know a lot of times they'll catch up. And that's literally like what I used to call it to describe it to people. I'd be like, it's the catch up. Like the 30 years will catch up to where, like, to the high as well. So that'd be an opportunity where I'd be looking to go, into the 30, like buy on the 30 years and see if they catch up and press their highs as well. And it's not like I'm looking for huge movements. Like we're talking, it might just be like 3 ticks, 4 ticks, but one of the reasons I really like the treasuries is I trade a lot of contracts, and the treasuries trade in a large per tick amount. Like the 30 years trade at, if I round it off, it's $32 a tick, and times that by whatever, just say 10 contracts, that's $320 a tick. So if it moves 3 ticks, that's literally like close to $1,000. So
Wow.
I'm not looking for the crazy volatility. I prefer much more just really park it, just watch, and then really try to capitalize and grab those few tick movements. On the flip side, though, I'm no wizard. Like when it goes against me and I get in and it's bad, I'm out quick. I don't like sit around and see if it works out for me. Like if it goes a tick, 2 ticks against me, I'm like, okay, I'm out. I was wrong. Like time to get out of this. Live to trade another day. Because that's the downside to that big per tick value is if it goes against you several ticks, it hurts. It's like an expensive mistake. So, so anyways, as far as the setup, so there's that one, the catch up where one product's kind of lagging the other, but they're both treasuries. The other one, and they often work well together, is kind of like anything where it starts pressing that high or the low, just say the high, for example, though. And it just looks like it's going to press right through. And again, when I say it looks like, that's where I'm watching the actual order flow. I'm watching the buyers and the sellers. And when you see the buyers just being aggressive and piling on, and you see sellers pulling their orders or moving them up a few ticks, it's like, okay, the buyers are just going to run right through these guys, and it is going to rally like 3 ticks. And that's what I'm looking for. So those are really the 2 things I look for. They don't happen day in and day out, but they do happen, a lot, enough that I'm able to see it and trade that. And that's really it. That's what I look for. It's definitely, that's where it's too, like, you mentioned it, it's kind of funny now I'm reflecting on it, just like how I kind of beat FOMO or whatever. Like, I just don't feel the need to sit here and trade. Like I don't force trades, I guess. And it's paid off. But like I might do anywhere from 0 to 5 trades a day, but I would say a normal day is like 2 or 3 trades in that like 3-4 hour period, and that's it. Like I'm happy with that. So,
and it sounds like you're utilizing the divergence between 2 different instruments.
Yeah, those 2 treasuries, they really. Sorry, go ahead.
No problem. It sounds I'm real interested in your risk management. Like how do you approach risk management in your trades? Like, do you have a specific system for cutting your losses? Because I noticed you said you cut your losses fast.
Yeah. I'll admit I'm not the best at setting a stop loss. 100%. I'm not gonna lie and say I am. People are like, no, no, no. I've seen your videos. Um, it is very much. It's definitely discretionary, but it is like it, I think because I went through it earlier on where I did do the whole like just sit and wait, and it goes against me, and I think it's going to come back, and it just goes against me more, and I'm like taking a beating. So now like literally, it depends in part like how much, like how heavy I'm in the position, like how many contracts. But I would say if it goes one tick against me, it's kind of like, all right. I mean, it bounces up and down a tick or two. I mean, that's fine. But if it goes two ticks against me, and I'm able to look at it objectively and go, you know what, the other side, the other team on this tug of war is really gonna win this. I just get out, like I just eat the loss, and I'm like, all right, not every day's a winner. So, it's discretionary, but luckily I have the whatever in me to like be okay with that and actually cut my loss. But definitely, like I said, discretionary. Like I always say I should be using like actually set up stop loss and stuff. And sometimes, I mean, don't get me wrong. Sometimes I do, especially if it's if it's a little bit more of a volatile day. Like I will actually like put in a stop loss of 2-3 ticks.
Mm,
Um, 2 ticks is tough just because you do sometimes get that little just flurry of bounce activity, whatever, and you get stopped out and then it goes your way. But I mean, that's just the name of the game. I mean, over time you see all kind of case studies play out, like
right.
but what feels good is you take your 2 tick loss and it continues to run against you, so you're like, okay, good, I'm glad I got out for a 2 tick loss and not a 10 tick loss where I'd really be
Right.
eating it. So yeah, that's kind of it. I mean, it's discretionary. And then as far as on the win side, I'm usually looking for, like I said, 3 ticks. Pretty happy with. Occasion if it looks like it's going to continue to run, fantastic. I'll manage the position. Usually, if it gets to a point where, let's say I'm in whatever ZB or Ultra, I actually usually trade Ultra Bond more, but if I'm in trade and let's say it quickly rallies like 3 ticks in my favor, I don't necessarily just get out. Like I'll be like, okay, let me actually set a stop loss at like break even now. So this is like free rolling basically. Like I'm either up 3 or 2, or maybe it comes back and hits my stop loss, but my stop loss was at break even. So it's no harm, no foul. Um, in those cases, like I might, like I'm kind of visualizing in my head. I'm sure people love story time when they can't see it, but let's say it rallies 3 ticks. I set a stop loss at break even. It starts coming back down. I will just like, okay, click, like flat position, get out, and maybe get out for 1 or 2 ticks. Like it's still a profitable trade, if you will. So
Wow, man. The beauty of it all, man, is there is no wrong way to trade. And
yeah.
this is some really, really tight positioning that you mentioned. Like you stop losses 2-3 ticks, take
Mhm.
profit 2-3 ticks. I'm like, wow, that is some tight trading. and you gotta really be able to read the DOM to get some tight trading like that. So
Yeah.
like walk us through your daily trading routine. What does a typical trading day look like for you?
Sure. It's pretty standard. I mean, I don't do like I feel bad almost saying this. I know some people like give it their all and put in all kinds of work and stuff. I just literally get up, I get some coffee, make breakfast, whatever. 8 a.m. Okay, kind of on the computer, have the depth of market loaded up, start watching the action. Like I said, the U.S. Treasury market opens at 8:20 a.m. and I only trade the U.S. session. I mean, it's when the most activity is. So,
Right.
and I don't necessarily trade the open, but I kind of want to watch it and see what transpires.
Mhm.
Uh, Watch it as far as like on the depth of market, see what's going on. Maybe a quick look see to see what news is that day. Um, and I basically just sit here at the desk and I want to say start trading, but I mean just watch and look for those setups, if you will, and hopefully sniper a few trades through the day. Usually by 11, I'm like thinking about wrapping it up, depending on how things are going. Like if nothing, like some days, like literally, it's slow, like after 10 a.m. or 10:30. So if it's 11 and just nothing is happening, and I mean literally sometimes the treasuries will just not move for like several minutes. Like they'll just sit and like have one tick range, like nothing is happening. So I'm like, all right, I'm trying to squeeze. Like I need some movement here to make the magic happen. So if nothing's happening, like I just call it a day. Like literally my goal day in and day out is to basically be done by lunchtime. And then so I don't do a lot of like analysis and stuff. And like it's very robotic. And I think that's why it's not sexy to people like to trade the treasuries or trade the depth of market, because it is very much just like sit here, watch stuff, click a few buttons. And all the while I'm doing other stuff, like because I have two monitors. I mean, so if I'm only doing say 2 to 4 trades a day, it's not like I'm just sitting here intently watching the screen. Like I can have it on and then be doing stuff on my other screen. Most of the time it's wasting time, like goofing off on Discord and stuff. Sometimes it's doing whatever, work on my site, or occasionally I make videos. I'm usually not making a video while I'm trading, but maybe planning a video or thinking about it or something like that. And that's kind of it. Yeah. Once the trading day is done at like lunchtime, eat lunch, and then I go on with my day and just try to get outside. I mean, it's fine. It's not like I'm some huge outdoorsman or sporty type person or anything, but another thing, and I mean, it's easy to tell people this, but I mean, if you don't like doing it, you don't like doing it, but just get outside, like literally go walk around the park or go to Starbucks, whatever. Like if I don't force myself to go outside, like I work from home. I don't like have a huge reason to like go out. Like I don't have lots of obligations. I don't have kids, single. So it's not like I have like a lot of reasons to go do other stuff. So I kind of force myself just to get outside. And I think that's good too, just for like clearing your head and kind of getting away from the computer. So it's not just there like taunting you, like you could be trading. Yeah, that's kind of it. I mean, I hate to say it. I don't hate to say it, but also I usually just don't bother with Fridays. Treasuries are pretty slow on Fridays, so unless like I'm really bored or feeling the need, like I'll trade Friday. But normally just Monday to Thursday, and that's kind of it. That was part of, I think, the genesis. I'm not trying to rally into it, but this Canadian futures trader persona, like when I was trying to put out information too, it was almost like it was a hobby that turned into much more. Like it became as big as it was. So that's almost like one of my hobbies, if you will, is the CFT stuff. So
Nice.
So I do a lot of that stuff as well in the afternoon. So that's kind of it.
So tell me, how do you decide to enter or exit a trade? Like what indicators or signals do you rely on the most?
So none, as far as like indicate, like I don't even look at charts and stuff. I literally just use the depth of market.
Wow. So not even a naked charts trader, a naked dom trader.
Yeah.
Wow.
It's all dom. Like literally my screen is like the ultra bond, the 10 years, sometimes the 30 years, but let's just normally it's the 10 years and the ultra bond. It's two depth of markets side by side, just watching them bounce up and down, and just scanning back and forth and looking for basically those two setups where it's either going to push through a high or low, and or it's going to, I like it more when they're out of whack and I'm doing that kind of correlation between them. Like if I in quotes had an indicator, it's that's what I'm looking for. Like it's not like a thing on my screen like that pops up or anything. It's just like I'm just watching and looking for that correlation to like be out of whack. And then that's kind of like step one. Like they get out of whack, like okay, cool.
Right.
Sometimes they get out of whack and they don't necessarily like run right back together. So I'm also looking then, so let's say they're out of whack. The 10 years are whatever, pressing their high, and the ultra bond isn't yet. The next kind of phase is to see and kind of watch the 10 years a little bit more and see if they are continuing, like they're going to hold their position kind of and just keep pressing the high. And not just retreat back to like say the middle of the trading range. So they keep pressing their high. Then if it looks like all's good on that side, then I'm kind of like, I mean, it's easy to watch two depth of markets. It's not like it's difficult, but then I'm looking more though at the ultra bond, like, okay, am I seeing what I like to see? Am I seeing, like, say the buyers, like let's say the press and the high, like, am I seeing the buyers catch on the ultra bond? Are they starting to be like, okay, we need to rally here a little bit? And whether or not that's actually the mentality out there, I don't know, but it's the way I think of it. And then so if the ultra bond's starting to rally, starting to push a little bit more, it's like, okay, cool. 10 years continuing to move up. Ultra bond seems to have warmed up to the idea. So I'll jump. That'll be like kind of the indication, if you will, or kind of the 3-step stage I look for. And it's okay, let's go in on the ultra bond, and hopefully they do continue to move up 3, 4, whatever ticks. And you're right, it's not a lot of movement. Like we're talking, but the treasuries don't trade in like a huge range. Like I'm gonna say 20 tick range now, and some obviously every day is unique, but they don't trade in like a monstrous range. So it's yeah, like I mean, maybe they trade in say a 20 tick range during the day, and I'm looking for 3 or 4 of that movement. So yeah, if they catch up, then it's kind of like cool, mission complete. But I'll continue. That's where then kind of next phase is kind of the risk stuff we talked about. Like, okay, I have my stop loss in, maybe a break even or 1 tick, and then I'm just watching to see if we can continue the movement, or if it's kind of losing steam, I have no qualms just getting out. And like same thing with like the FOMO and all that. Like if I get out and then it keeps moving, like I don't punish myself. I see so many people do the whole like, if I'd stayed in, they play a lot of the what if game. Like if I'd stayed in, I would have made this much more, blah, blah, blah. It's like, yeah, but you didn't. Like that, you could say that like it's always going to continue going good or bad against you. Like there's only 2 options really. So yeah, a lot of times you're going to get out and you could have made more, but it's like, you just got to move on to the next trade. So, and that's kind of it. I mean, that's kind of the CFD 3 or 4 or 5 stage system, if you will, for what I'm looking for.
Man, I love how you're emotionally locked in. It's like the way you describe everything is you have no issue with FOMO at all. And so I want to talk about your emotional and psychological aspects of things. What role does emotional control play in your trading? How do you manage your stress and anxiety during losing trades?
Yeah. No, and I think you're absolutely right. It's very important. It's something, I mean, I dealt with, I think almost anyone deals with either, and they get over it or they just manage it. But back in the early days, I definitely had the whole, like, I remember trading evaluations and being like say I blew an evaluation, like it hit hard. Like I felt like I was a loser, like, oh my God, I screwed that up. I told myself I wouldn't do XYZ again, and I did XYZ again. Like I'm never gonna, like all the stuff, right? All the stuff. Like I'm never gonna make it. Blah blah blah. That's so it's kind of multiple parts of this answer, but a big part of it was doing the forcing myself to like trade less, because then I'm not wrapped up in it all day. So that definitely was a huge help. I would say in general, I mean, this isn't something people can do, unfortunately, but I am a pretty like low stress type of guy. Like futures, if anything, brought the worst out of me like at first, because like I'm pretty low stress. I cruise through life, all is good. Something bad happens, I'm like, okay, like how do we fix this or get around it, or all will be good. But yeah, if it, like I'm remembering those early days and like just being like completely like frazzled from futures trading. So yeah, getting away from the computer was a huge help. And then as far as the losses and stuff, I mean, I'm trying to think of like what changed, only because like now, I mean, you're right. It is just like, I don't know if it's that I manage like stress well, or I'm a robot, but one of those two. But I'm not a robot. I'm not a robot. I have feelings. Man, I'm really trying to think of what changed between then and I think I did in the early, I call it the early days. I mean, we're talking like 3 years ago. I did in my first few years of my journey, if you want to call it that way. I did do a lot of focus, more so once I kind of started figuring out the trading and the depth of market and the treasuries, but I still was doing the stuff like I'd blow an evaluation and get stressed and blah, blah, blah. So I started to work more on the psychological part.
Mm.
I read, I mean, I didn't go super deep, super hard into it, but I definitely did focus on it. So I was reading books and watching YouTube videos, and like I have a horrible memory because if you're asking me to name the books, like I'm not gonna be able to do it. The standard books that people read, I read the standard books that people always recommend. One person I did watch a lot of was Mark Douglas. He was like a trader. He's old seminars of his, like
Right.
I don't know when they're from, but they're like from the 70s or 80s or something, maybe in the 90s. I
Right.
don't know, but
Right.
I would find them on YouTube, and they were pretty helpful. Like he was pretty cutthroat, pretty like really. I really latched on to his stuff, if you will, and about just being like trying to remove the emotion from it and stuff. I listen to like what you're doing, like podcasts. Used to listen to a lot of podcasts. I've kind of gotten away from it, but with traders, some were entertaining, but
Mhm.
some were actually like educational, if you will. Like I actually
Right.
took
Right.
something from it. Actually, so like I mentioned John Grady, like yeah, I found his YouTube videos, but also found like a 2 hour or whatever podcast he was on, and just again listen, like I couldn't get enough of it. Like just listening to him talk about it, even keel dude, like no stress, like kind of like I really do feel like I've modeled myself after him, just in like like if it's a loser, you get out and you move on. Like it's no big deal. Like you go on. The world's not going to end. Um, so listening to a lot of that, but really trying to absorb it because I feel like again I'm not like I just feel like in seeing over the years different traders and talking to them, like they continue to have the same problems over and over and over. I guess the
Mhm.
difference with me was like I would have the same problems, but at some point I was like, okay, like I need to fix it. Like, what do I need to do to actually change this? So,
Mm.
and just slowly over a couple year period, changed it. Got good with the risks. Well, I don't know about good with, well, like just the emotional side. I got to the point, and I think too, like really is a thing where um, over time and you have enough experiences and you go through it enough times, you start to realize like, oh yeah, like the world isn't going to end. Yeah, I had a bad day, I lost some money. Tomorrow's a new day. Like you just gotta approach each day as a new day, and not like the whole revenge trading, whether it's within the same day or the next day.
Mhm.
I mean, that's just the ups and downs of trading. Like it's unfortunately not a career where you just make like you earn money by the hour. It's just not.
Right.
I mean, it's
Right.
really one thing too that maybe I just accepted that was that, over the span of whatever, a month, a year, like a lot of days are just you lose a little, you win a little, and then there's those few key days where you either make a lot or you lose a lot. But if you can cut out the lose a lot days, you're sitting pretty.
Right.
One other thing
Right.
that just occurred to me, and sorry to keep going, but this does
No problem.
kind of tie into how I maybe wrangle things in is, I come from like a very like whatever mathematical like numbers, like I'm just that type of guy. So
Mm.
at some point I started journaling my trades as well.
You
And
you have a background in probability and statistics?
not a ton, but my degree and my master's is in like accounting and finance and stuff. So I definitely did
Ah.
do like a lot of stats and economics and type stuff courses. So, um, so yeah, so I mean, I knew enough to be dangerous. Like, yeah, and so when I started, maybe good or bad, it was good. It worked out for me. When I started journaling trades, and you kind of accumulate these statistics over time. Like, I love that stuff. Like, I don't know if I love it, but I like it a lot. Digging
Right.
into the numbers. So then I have like a history of statistics, and that's where I can look in it and go, okay, like, hey, when I trade in the afternoon, I definitely do worse than when I trade in the mornings. And this wasn't just one day. This was over the course of like 2 months or something. So it's like, okay, maybe we cut out the afternoons. And it's like, hey, when I'd really dig into like the losing side, I was like, okay, the winning side takes care of itself. The losing side, okay, if I let this trade go, you know, like back in the bad days, like say 5 ticks against me, like how often does it actually come back? And it's, you start looking at the numbers, you're like, well, really not that often. Like once it's 5 ticks against me, it might as well be 20 ticks against me. Like I'm screwed. So get out before it gets 5 ticks against me. So digging in those numbers, like that clicked for me as well, because I can look at it objectively and say, okay, yes, like this, and this are like set in stone, like it's right in front of me from a numbers perspective. So that really helped kind of focus me, I guess you'd say, and be like, okay, let's try and do things like by what the numbers say I should do, and that's cut. I mean, it's no surprise you should cut your losers quickly and try to squeeze as much out of the winners. You're like, oh, hey, yeah, that stuff works. So that was kind of it. So I don't know. That was a big long answer. Yeah. So the journaling, the statistical side for me helped cut out a lot of the emotional stuff because it kind of guided me towards the right direction. I would say as well, just like kind of latching on to traders, whether it was through podcasts or videos, who had the mindset that where I wanted to be, just being very calm about it, being very reasonable, realizing it's not the end of the world if you have a losing trade, and you're kind of purposely, maybe not purposely, but you are throwing yourself in a bad position when you overtrade or revenge trade and stuff. Like your emotions are high. Like I remember this, like I don't know what my worst day was, but I remember days where I'd blow an account, like an evaluation or a funded account, and I'd reset and then blow that and then reset and blow that and reset. Like I don't know what my maximum was in a day, but there was definitely days where my emotions turned me into like the worst person. Like I was hell bent on resetting and passing. I mean, I'm not even trading at that point. It's just gambling. So it's just stupid, like looking back on it. But it does feel good to be like those days are long gone. So, yeah.
So like, tell me, have you ever experienced a significant loss, and how did you mentally recover and adjust? What is your approach?
I have. I'm trying to think. I'm trying. Like I honestly don't know what the biggest one is. Definitely 5 figures. Like I want to say it was like 30, 40 grand on a trade. Yeah. I mean, believe me, those are there was probably only 1 or 2 of those. It's definitely not something you want to go through a lot. And that was just being stubborn and stupid. And trading way too big at the time. It was probably on the cusp of when I thought like things were going well, so then I thought it was super great, the trading, and then I ate it pretty bad, and I realized, oh, maybe I'm not as good as I thought I was. But like even that trade at that point, so let's just say that was the worst trade. I think it was probably, let's say it was 40 grand, and that was like my own money. So I was at some point in there, I transitioned. Like I still trade a lot of the prop firm funded futures companies. I have accounts at like a bunch, but at some point I also transitioned to just trading my own capital more and more, and kind of grew that. So that big loss was on my own account. As far as how do I deal, but I think maybe even more relatable is just like, yeah, like blowing funded accounts, or like being up even like 5 grand like one day and then losing it all the next, or something like that. How do I deal with it? I just I really do. I mean, it's okay to kind of wallow in it. Well, I don't know if it's okay, but what I do is it's okay to kind of wallow in it for like a bit, but don't let it like ruin your entire, like you have to realize like what's done is done. Like you can't fix it. You can't change it. So at least try and learn something from it. And I mean, yeah, I know sometimes it takes a lot of repetition. Like you got to take a few beatings before it actually sticks, that you learn something from it. But I mean, try to at least make the effort to go, okay, what did I do wrong? Yes, I'm not happy I lost X amount of dollars today. That's a given. But like I said, you can't do anything about it now. What should you have done an hour ago or earlier when you were in the trade or before the trade? And try to actually remember that the next time you're in this situation. Like, oh yeah, that last time when I took that 5 grand, 10 grand, whatever beating, like I'm in that same position now, but I can stop it before it gets that bad. Like maybe I should stop it. So I feel like it's a lot of repetition and kind of like learning, like over time, like learning bit by bit by bit, it does actually accumulate. And sometimes sometimes it does not feel like it's going to. I remember, and I mean, I'm still learning. Like, I mean, I feel like it never ends. Like, you never stop learning.
Right.
And the markets change and all that type of stuff. And again, I was gonna say, I'm trying to stop myself from saying in the early days, but in the early days, like I would say, make a change, and it just didn't feel like anything was actually changing, but it does. Like, over time, you look back 6 months ago and you go, oh yeah, I have changed. I have become a better trader. Like, yeah, maybe I'm no different than I was yesterday, but 6 months ago, I've come a long way. So, some of it is just putting in the time and trying to be the best trader you can be, and letting those small like bits of knowledge accumulate, and yeah, I mean, that's kind of it. And then, really, I mean, it goes for anything in life. Like, really just try to, you can't, I mean, I've said it about 10 times now, but you can't change what's already happened. So try to at least get something out of it and get that bit of knowledge and use that in the future. And actually, the using it in the future is the real value from that situation.
So tell me, how do you stay disciplined in sticking to your trading plan, especially when the market's so unpredictable?
I say disciplined. I think it's a combination of, I mean, it really is a combination of my personality, which I know doesn't really help anyone else, but just like I am, like, oh, like, you can't be me. I just can't give you my personality, but just trying to model yourself after, I don't know, the knowing, I mean, really, it is the knowing what works, and even when knowing that in the long run what I'm doing works for me. So even if I have a bad day, and let's say I have a second bad day and a third, like, it's just a bad week, whatever, like, I know it will turn. Like, what I've been doing has worked for the last several years. So, I mean, yeah, there might be a point where it's like I have to look at and go, okay, it's not working. Like, it hasn't worked for a little bit now. Like, what am I missing here? Like, what should I be changing? Am I getting caught up in those old emotions that I felt like I beat, and maybe I didn't? Maybe I just suppressed them or something, and things like that. But I'm pretty introspective, I guess, in that sense. Like, and I'm quick to react. Like, I won't say I'm quick to react, but I'm like, I can take an objective look at it and go, okay, I'm just losing because, yeah, like, I'm sticking my setups, or my few trade setups, and just maybe one or two of them was stupid. Like, I shouldn't have gotten in that trade. Okay, like, we need to scale that back. Don't jump in just for fun, just for something to do. Like, I mean, I'm a victim of that as much as anyone. And then part of it is going, okay, like, has anything changed, or is it just like an unlucky streak? Like, I mean, there's going to be phases where it's just doesn't go your way, and then also you can reflect on the times where it went your way, like, all week. I mean, there's a great week where every trade, well, not every trade, but like, for the most part, was just a great week, a lot of winners. So I think it's taking that step back and not being like too wrapped up in like the moment or the day, and going, okay, bigger picture, 10,000 foot level. Do I need to make a change? And that's worked pretty well for me. I mean, I will say, and again, this isn't something, unfortunately, that you can just do, but life experience and being like older, like, I've definitely, like, if I was myself, but like in my 20s and trying to trade, like, I wouldn't be doing what I'm doing now. Like, I'd be wrapped up in it. I'd be excited. I'd be wanting to make all the money, blah, blah, blah. Like, it really did. And I mean, I don't know how this sounds to people, but there came a point where it's like a weird position where it's like, yeah, the whole point of this is like to make a career out of it, make money, earn an income, all that stuff. But it gets to a point where, like, I don't sit down and go, okay, I need to make $1,000 today. Like, I don't. I just do my trades, and whatever shakes out. And like, I know it's not a consistent, like, every day is $1,000, but as long as the bigger picture, everything's working out, it's all good. So I'm not like too focused on the dollar amount, but I get why people can be there, and they do feel that. I mean, that's another thing. I mean, it is a tough position for people to be in, when it's like they feel like they have to make the money, like rent is due or stuff like that. Like, that's like, it's easy to tell people, like, just don't do that. Like, you don't want to be in that position. But I mean, if you're just in that position, like, you got to do what you got to do. But that's tough. Like, you're fighting an uphill battle when it's like the money is the main focus. And I kind of got away from that. Like I really have just
Mm.
not focused on the money part of it. The money falls out from all the hard work and just doing my thing and being consistent.
So let's talk about your learning and your growth. What books, courses, or resources had the biggest impact on your trading journey? I know you mentioned the other fellow when we first started.
Yeah, John Grady. Let me look here. Sorry, like I said, my memory is horrible, but I do have them written down here somewhere on my site. So that's why I wanted to, if I can find it. Okay, yeah. Hang on a sec. This will be okay. So I'll just start with it's not necessarily a book or a course or anything like that, but
Mhm.
back before, I swear to God, I feel like I'm 80 or something. Back in my day, so when I started, like Discord wasn't a thing. It was a thing for like gamers and stuff, but there wasn't any futures. I mean, there probably was, but they weren't
Right.
prolific like they are now. Where it's like every company has a Discord, lots of people have their own Discords, all that. There wasn't a
Right.
good way to interact with other traders. Like, really wasn't. Back then, it was more. There was a couple of like online forums, like message boards and stuff.
Uh-huh.
So I used to get in there a lot and interact with people, and it's kind of like Discord. I mean, it's not real time like Discord, but it's like Discord in the sense is that you realize quickly maybe 10% of the people here know what they're talking about, and 90% of the people don't, or they're new to it, but they're trying to, or they're just trying to learn too. So I kind of latched on through the forums onto like the few people that seem to really know, and I would just read, like I would absorb whatever. And I don't have any specific people, but that was just so maybe just a general takeaway from that is just try to find good people and kind of model yourself after them, you know. I used to listen to, so I never took any courses. I'll take a step back. So John Grady, and I keep mentioning him because I really didn't like focus on a lot of like mentors or teachers, if you will. He has courses. I did like the basic course. It was like a few $100, but that was more technical, depth of market, Jigsaw type stuff, and some treasury, some technical stuff. So I learned more of like his style from that stuff as well. I used to, I'm trying to look here at books. Okay, here we go. I found my list of books that I read. So I mean, I'll just rattle them off. There's only, what was about 6 here. The Mike Bellafiore from SMB Capital, their big prop firm
Yes.
in New York. So he has a few books out. I read both those, The Playbook and One Good Trade. From what I
Yes, I
remember,
read that one.
yeah,
Good one.
One Good Trade was one that definitely stuck with me. And I think too, like if anything, I model like I'm very good at like just compartmentalizing. I'm having trouble with that word. Each trade, it's like, okay, like one, like just focus on this trade. This is this trade. Okay, good. It worked out. You know, let's try, or even before the trade, like just hunt out and wait for like one good trade, like literally one good trade, wait for one great setup and attack that rather than chase the market all day. So
Right.
Trading in the Zone with Mark Douglas. I mentioned Mark Douglas. So the book is good, but I definitely am much more of like an audio or visual type learner, if you will. So seeing his like seminars on YouTube, and it's not like on his official channel or anything. It's literally someone who bootlegged this course or something and put it up there. But if you search for Mark Douglas seminar, you'll probably find it on YouTube if it's still up there. Also, The Mental Game of Trading with Jared Tendler. That's very trading psychology focused. It's pretty good, I would say. Like, I didn't necessarily latch onto it as the best book I've ever read in my life, but it definitely, like, you read that stuff and it kind of helps you sort through some things just in terms of like, I mean, a lot of the stuff we talked about kind of calming your emotions, focusing on good trades, realizing that like, you know, trying to take away the good from, you know, a bad trade and all that type of stuff. And then there's a few books that I read that aren't necessarily trading specific, but they're good with the mentality side. So there's, I mean, there's big ones like Atomic Habits is
Yes.
clear. It's just about developing habits and
Great
that
one.
I think all that stuff's like super important. And then I read Mindset. One that was recommended by a lot of people was Mindset by Carol Dweck. I read that one too. I honestly don't remember too much about it. That one was one where I don't want to put it down, but so many people recommended it that I was expecting it to be like the best book on earth about trading and mindset and stuff. It was okay. And then and then the last one I've got here is it's a book called Breaking the Habit of Being You by Dr. Joe Dispenza.
Hmm.
And more just like mindset stuff. Breaking bad habits is like literally what it boils down to is, yeah, like realizing if you keep doing the same stuff, you're going to keep having the same results. So breaking those bad habits and how to go about it. And like, I mean, I can just speak like through my own experience. Like, yeah, like we talked about a little bit earlier, like breaking away from, for me, and again, I'm not saying this is bad, people do what they want to do, but for me, I knew that just trading in the mornings and kind of focusing my efforts there was the thing to do. But it was really, really difficult to do that, like to get away from the computer and not
Mhm.
feel like I was missing out. But and it's like, I don't know how to describe it other than it's uncomfortable. Like when you do it, say the first time, like you're just like, okay, I'm going to close the computer at noon and not trade. It's like you feel like you're missing out and like, oh, what if, and like I'm down for the day, maybe I could make it back in the afternoon. Like it's just uncomfortable. But you do it, you break the bad habits, like you do it day and day, and then you realize, okay, and then you look back and go, okay, no, I didn't actually miss anything. Or maybe I missed a big market move, but so be it. Like I missed it, I got to be outside. So um anyways, back to the books. That was a good one for just doing exactly things like that, like breaking those bad habits. Like I said, I never really did any courses. One thing I will, um, I'll try not to ramble on too much longer. I used to listen to chat. We talked a little bit about this like a few days ago, but I used to listen to the podcast Chat with Traders back when it
Yes.
was Aaron who founded it and ran it.
Aaron Fifey.
I've
Yep.
Yes, and I kind of lost track of it. I know when he kind of got out of it and found new hosts, I gave it a shot. It just wasn't clicking anymore. But some of the old school interviews, which are probably 5+ years ago now, um, there's a few people on there that are just classics. I have like one right up on my screen, but so Dr. I actually even have the episode numbers numbered down here.
Mhm.
Episode 65 with Dr. Brett Steenbarger. I'm probably saying his name not completely right, but he's like a well-known trading psychologist guy out
Yes.
there. So it's good just to listen to those podcasts and like absorb kind of the knowledge that they have.
Indeed. Indeed.
Yeah, so that one was good. And the one that I liked probably the most, and there's actually a video version of this one on the Chat with Traders YouTube channel. And again, it's probably years and years old, but it's episode 163. John Rambo Moulton.
Mm.
He's an American, but he lives in Australia. A lot of what he has to say is it just aligned well with like where I was kind of at and still am at. Like he's very much just get in there, do your trading, try to take the emotions out of it, be a sniper, work on improving. It's all the stuff, like all the good stuff that you're supposed to do, but just his delivery of the information really kind of stuck with me. So John Rambo Moulton, he's like 40+ year pit trader, like just it's again kind of goes hand in hand with like try to learn from people that are good at what they do. I mean, that goes for anything in life, but yeah, when it comes to trading, try to learn from those with experience and who um, aren't just trying to like. That's why I never really like bought courses and stuff. Like I really just tried to
Yeah.
learn from people who were, actually experienced and actually you can tell like when they talk, like, okay,
Right.
yeah, this person knows what they're talking about. So
Right. Right.
anyway, so that was it. As literally Chat with Traders, those handful of books, a lot of John Grady for me, and that's like kind of it as far as like where I kind of learned or entertain myself, and the forums, of which would now be, those forums still exist, the trading forums, but they're not. Discord's kind of taken over as the go-to place for people to
Right.
interact, obviously. So yeah.
So, like, you mentioned earlier that you take 5 trades max a day. So, tell
Yeah.
me, how important is journaling your trades? What insights have you gained from keeping a trading journal?
Sure. It's definitely, I'll just say up front, it's definitely something I encourage people to do. It took me a while to start doing it, and it was another
Mhm.
one of those things where it's like it's one thing to do it, but it's another thing to actually then like use it and like look at the information and reflect on it and then make changes based on it. But so I I mean, there's obviously several different journaling, software platforms out there. Some are automatic. Some you have to manually like download your trades and upload them like in
Mm-hmm.
Excel, CSV, whatever format. Um, I'm not plugging. I'm just trying to get to where I'm at. I use the Jigsaw Day Trader software, but that company also has Journalytics, which is a journaling software, and it plugs in easily with Day Trader. So
Mm-hmm.
all my trades are automatically captured, which kind of overcomes step one of actually having to do anything. Like the trades are just captured. So
Right. Right.
the stats are already there. So I have no excuse. But the second part of that is actually like making notes and like kind of capturing the important like intel on them. Like,
Right.
why did you enter this trade? Or were you 100% sure this was going to be a good trade and it was or it wasn't? Or was this like you were bored and like that happens, you made this trade and yeah, it's screwed up or you got lucky. I mean, and it worked out. Anyways, um, the importance of it is definitely in my case was all not so much the note taking, but more the statistical side of it. Like I like being
Mm-hmm.
able to go and look and set my dates and say, like, let me look at October 2024. How many trades did I take? What was my average win? Was my average loss? I also look at things like, and I know it's one thing that I know a lot of traders don't necessarily focus on, but MAE and MFE. And if people
Mm-hmm.
aren't, I mean, I'm sure know, but if anyone's listening, MAE is your maximum adverse excursion,
Mm-hmm.
and I'll explain it in a second. And MFE is maximum favorable excursion. It's basically how far are you letting trades kind of go to the extremes. Like if I like an example, like if I enter a trade and it goes 10 ticks in my favor, but then it comes back and I get out at 5 ticks. Well, my MFE, my favorable excursion, the furthest it went, my maximum profit was 10 ticks, but I
Mm-hmm.
only got 5. Same thing on the losing side. If I get in a trade and it goes, let's just say 6 ticks against me, and then it kind of comes back and I'm able to get out for, let's just say it comes back and I get out for like 2 tick winner. Like some people might look at it and go, hey, good trade, you made money. No, it was not a good trade. I let that trade go 6 ticks against me. I got lucky that it came back in my
Right.
favor. um,
Right.
that is not a good trade. And I think that's what some of those statistics like MFE and MAE really highlight for you, because you like that's one example. Now look at like a month or a year. If you see that, and again, I like to focus more on like the negative side. Like if you're seeing that you're letting trades just run, you know, like I can sit here all day and tell you, oh, I get out at a 1 to 2 tick loss. But if I look at my stats and it shows that my MAE, my adverse, the negative, is like 8 ticks, like no, like I'm letting trades run 8 ticks against me. Maybe I'm getting lucky and they're coming back, but that's not good trading. So I think it really like the numbers don't lie. Like it literally, especially the larger sample size you have, they don't lie. So getting back to maybe where I was supposed to go with this, but I like being able to compare, and maybe that's what also keeps me kind of steadfast in what I'm doing and stick to my plan in general with like being selective on trades and blah blah blah, because I'm able to look at my stats and I can compare October this year to October last year. I can compare this year to last year and as a whole, whatever it might be, or just all the years, compare them all, and just make sure that the numbers are lining up, like the win rates. So I look at those two stats, MA, MFE. I also just look at like average win, like how many ticks, like not dollars, like I just like how many ticks, average loser, and then also just win rate, like how many are winners, how many are breaking. The thing with trading like a very tight tick range is you do get a lot of break even trades, like
Right.
so how many are winners, how many losers, how many just broke even. And I mean, I'll look at, I mean, of course, I'll look at things like money, like how much money did I make? What's my profitability? But I'm really the focus and where like the work is like those like 5 or 6 stats, whatever I rattled off. So I can see like if my win rate starts to fall, like, okay, what's happening? Am I taking like more trades than I was? And I'm obviously like taking, some questionable trades. Why did I do that? That type of stuff. Like it really kind of brings you then down several paths. So to bring it back, journaling is super important. It is something I feel like a lot of people don't do that they should. It's probably like the easiest thing people like. It's like, I was gonna say it's probably the easiest thing they could be doing that they're not doing, in that, I mean, it's just automatic, like it's there, but you do kind of have to then like make that effort to use the numbers, use the data. Um, so if people can kind of like work on the psychology side of things and the statistical, like actual results side of things, like that's just like a winning combo. Well, I'll say it's a
Mhm.
winning combo. Like it will get people a long way, like towards being like super successful.
Now, this is something I want to talk about because I run across a lot of new traders
Hmm.
that don't that stray away from demo trading, thinking they want to go straight into the markets. You know, they don't want to deal with the demo too much.
Hmm.
So what is your view on demo trading versus live trading when it comes to refining your strategy?
Um, yeah, it's pretty like like you hear it time and again. Like anyone like who's demo trading, they're probably seeing success. Maybe they're not. Let's assume they're seeing success in their demo trading because they obviously want to move to live. That's why if they were
Right.
losing demo, they don't want to move to live. But so they're seeing some success. You can tell them a million times that it's different in the real markets. They probably won't listen to you. They'll do it, and chances are most of them will lose some real money. Um, there's a couple problems. I mean, I'm like some things like I don't know what to tell people. Like everybody's different. You can give them the best advice on earth, and sometimes people just kind of need to learn the hard way, like unfortunately, but hopefully it doesn't ruin them. The big things with demo trading are, I mean, one, it's easy to have a selective memory and just remember the big winners, like unless they're doing things like we just talked about, like journaling and looking at their actual statistics, not just selectively. um, like maybe they're not as great a trader as they're thinking they are in the
Hmm.
um, demo trading. And there is too, and again, this isn't like new, it's like what you'll hear out there. It's like, yeah, there's the psychology part. Like demo trading, there's no can I get the word, no commitment, like there's no like actual risk on your part. You start trading real money, and whether it's your own real money or it's like you pass you try for an evaluation and you pass, and now it's like you're trading someone's money. But I mean, it's just a different ball game when it comes to emotions. Like even for myself, like I notice a big difference between trading my own, like legitimately own money in my interactive brokers account versus trading I don't want to like plug or say any specific prop firm, any of those accounts. Like there is a
Right. Right.
slightly different, even within me, and it's not something I think I can change. Like, oh, I probably could if I really worked on it, but it's like it's just inherently like when it's your own 20 grand or whatever on the table versus the few $100s you like if you blow your funded futures company account. Like, okay, yeah, it sucks, but really you just spent a few $100s, whatever you spent, to get it.
Hmm.
So there is a big difference. So um and yeah, it's fun when you make money. It's not fun when you're trading your own money. It's not fun when it goes against you. So I mean, for all those, I don't like I feel like there's a balance too. Like I've seen most people, yeah, trade demo. They want quickly to trade real money. There's the handful too I see who trade demo and like want to stay demo for like ever. Like they're like, I'm just gonna trade demo over the next 6 months. I'm like, yeah, but there's kind of a point where you've kind of maxed out the demo purpose. Like at some point you got to put a little skin in the game. It might hurt, but try and do it. And I mean, like, and whatever form that takes for people, if it's like, I mean, the US, you guys are fortunate, and I don't know that everybody realizes, but like you can open a brokerage account for like $500, like deposit, and like you could trade like a micro, with low margins, like, and get your
Right.
feet wet. If anything, just get established, get set up. Unfortunately, a lot of countries don't have that. That's one thing I realized when I went back to Canada. They're far more strict on margins and things like that. Like margin for ultra bond here is like 10 grand or something, where in the US it's like a grand, like depending on the brokers. But anyways,
Uh-huh.
that's all an aside. Point is, take advantage of it. If you're in the United States, take advantage of it. Open a brokerage account if you want to get your feet wet. Start with whoever. Again, there's several very reputable firms. Put in $500, trade a micro, and get a sense of even that one micro will probably give you a little bit of a taste of what it's like to trade like real money. And you can test all your sim strategies in there and see if they work out. Would be my advice. But definitely don't think you're like at some point people need to have a bit of self-realization. Like if you're doing really well sim trading, but you know full well that futures trading is a very difficult game and most people fail and all that type of stuff, like you didn't crack the code. Like just to be a little bit humble, you didn't crack the code with your sim account. Realize that just because you're doing really well in sim doesn't mean it's going to translate 100% to the real world.
So how do you continuously improve and adapt your strategy to changing market conditions?
For me, it hasn't been too bad. I really haven't seen, luckily, and maybe this just because of the products I trade, the treasuries, there hasn't been a ton of change. So like the treasuries have, like, to me, still move and kind of correlate the way they did years ago. So I luckily haven't had to, but let's say I did. A big part of it is it's not so much, okay, for me, it's not, and this is just me personally, I'm not saying this applies to everybody, but for me, it's not so much that the market has changed a ton for the treasuries, but going back to the statistics and all that, and people might feel I'm harping on it, but I think it's important. Looking at the stats, and if I start to see something going bad, like that MAE numbers growing a little too much, or I'm taking, last month I took on average, 2.3 trades a day. And this month I took 4.6. It's like, okay, why did I double the number of trades I took? Like, what's going on there? I mean, that's like, in quotes, an extreme example, but like if all of a sudden I'm really kind of veering off path, that's when I would kind of self-correct, or at least ask myself, okay, what's going on? Like maybe I did it for a good reason. Maybe there was just lots of opportunity and that's a good thing. But for me, it's about performance metrics and things like that. And I mean, honestly, again, a lot of that just comes from like the person that I am. I'm a numbers guy, accounting background. Like I used to look at financial reports every single month and statistics and metrics. So I'm basically doing the same thing just on myself now instead. So, but I think if you can get into it, I think it's useful. If you can't get into it, I'm trying to think of what someone else like might do with themselves to like kind of course correct or adjust to like changing market conditions. I think a lot of it is just being honest with yourself, and like I would encourage people to take a genuine interest in being better traders, and not just like I see so many traders, they just want to like talk about, I made, again, it's the money stuff. Like I made $2,000 on this trade.
Right.
And like they brag about that trade, but they don't talk about the one where they lost $1,000. They just try to, and I get it. Like I get it, but I encourage people, if they actually want to be in it for the long run, to focus on the work and really trying to be better traders, whatever, like honestly, do anything, read one of the books, listen to the podcast, run your stats, whatever that forum takes for you. Maybe the next month, just try something new, try to take 10% less trades, like try to tighten up, what trades you're taking, try to look at the biggest losers you've had and realize what you did wrong. Like just do something. I mean, I'm just thinking of ideas like people could do. Like if you don't want to work on the statistics side, which is fine, but just focus on being a better trader. And again, it's like, that's something like, that's kind of lip service. Like people will say that like, oh yeah, I'm going to work on myself, but do they actually get out there and do something? Anyways, yeah, that's what I would encourage people to do. And that's what I try to do.
So let's touch on broader industry insights as we come to the ending of our stuff here. I want to talk about, what are your thoughts on the current state of the market? Where do you see trading opportunities today?
So for me, because I'm not like an equities guy, like I don't focus, like I don't look too much at like NQ and ES and all that type of stuff. The treasuries, especially, I mean, kind of at like a point where, I mean, you've got, just had the election, change in the presidency coming in January. So, pretty, like if you look ahead, there's a pretty fair chance that there'll be some volatility. I mean, good or bad. I'm not trying to pick sides or anything. I'm just saying, like, anytime there's a disruption, in the matrix or whatever, something changes. There's big change in politics in the world. world events, wars, stuff like that always impacts the markets as a whole. So I would say in general, be careful with like probability of increased volatility, but it also can create a great opportunity as well. Like when things are super slow, like probably futures in general, but definitely the treasuries as well is pretty slow through the summer. So as we kind of get into seasons where probably going to see a lot more volatility, probably going to do a little bit more sit and wait and just see what each day gives me. I'm very much like day to day, like whatever I see is what I trade. And if it's too crazy, don't trade. If it's too slow, don't trade. If it's just like the porridge thing, it's just right in the middle. It's perfect. Other things too. And this isn't people. I always tell people, if you think you're bored with the treasuries, let me talk to you about corn. I trade corn sometimes. And so I do look at a lot of like the bigger picture, like corn stuff and seasonality and stuff like that. You can do the same with like crude and oil and things like that. But again, that's not going to appeal to most like true day traders who are just in the mix day to day. I'm much more of a swing trader when it comes to corn. And I look at things like seasonality, crop reports, all the super boring stuff. So, but I think the bigger maybe point with that is not so much corn or anything like that. It's just like in the long run, traders, and hopefully their journey gets them to the point where they are like looking at things beyond just day trading. I'm not saying there's anything wrong with day trading. I'm just saying like maybe start looking at things like spread trading or, agriculture products, whatever it might be. It goes hand in hand with the whole, be curious, try to learn, and try to be the best as you can be. So I like seriously spend like time like looking at things like corn and how do you properly trade corn and when are the harvest reports and blah blah blah. So I've kind of lost my way here on your question, but the bigger picture and market volatility and stuff like that. To bring it back in, I would say for most people, just be a little bit more cautious, but also be open to the fact that there's probably a lot of opportunities, both now and I would say like the next, 4 months, 5 months, whatever, next several months, there'll be a lot of opportunities as well, with things just with political climate in the world and stuff like that. Oops, sorry, I hit the mic. So yeah, be careful, but be open to opportunities. I guess that's my kind of general takeaway from it.
And like, so with your years of experience in the market, how has trading evolved over the years, and how do you see it changing in the near decade, in the next decade, rather?
Yeah. Wow. Good question. I would say it's definitely especially in futures, there's been definitely a boom in interest. Like I mentioned earlier, part of why I even started the whole Canadian futures trade thing was because I had a real tough time finding information. So as I learned information, I was trying to share it with others. So it's not like I was an expert, but I felt like I could at least like get something out there unbiased, like just anything to help people. And that was the thing. Like I would get feedback from you, like, thank you for explaining this or doing that or whatever. So that's what kind of kept it going. So, but over the years now, huge, huge, like just a lot more traders, a lot more information, a lot more opportunity and companies, offering futures trading, things like that, prop firms, all that type of stuff. But along with that, to kind of get more to your question, is as well things like when I started, it was literally Trade-Evade software, NinjaTrader. There was others, but most people use NinjaTrader or Trade-Evade. That was it. Now there's like a ton of different software packages. A lot of them just web-based, which wasn't even a thing. Trade-Evade kind of was, but so there's lots more software. So you really have your pick of the litter these days. Like you really have the best of it. Like it only gets better. Like it gets better, but it also, I could see for a new trader, it'd be a little bit overwhelming. It's like you've got this person saying XYZ software is the best. You have CFT over here saying Jigsaw is the best and blah, blah, blah. So it could be a bit overwhelming. I would say just kind of look for the consensus, like on what most people are using, if you're new to trading. But anyways, so that's one big change I've seen is just the availability of both software. And then on top of that, availability of people. I mean, you said it perfectly earlier. I mean, this futures trading world, there's a million ways to approach it and attack
Yeah.
it with whatever product you trade or your mentality or the software you use. It's like the indicators you want to use. Like there's literally no two traders who are the exact same, I feel like. So it's like Cabbage Patch Dolls. So the so so with that selection, so there's way more indicators, way more software, all that, but it creates a lot of opportunity for people, but it also creates a lot of like, oh shoot, where do I start? So I would say start with stuff that's appeals to you most and really invest the time to become the best at it. As far as, and then, I mean, I would also encourage people, one thing you see that becomes super popular in like any industry, that especially ones that involve making money, but is like gurus and stuff like that. So while there were some back in the day, it's like there's a million, well, not a million, but there's a lot of them now. So I'd say be wary. Don't look to other people to be your savior when it comes to like trading. Like you can't just buy a course and magically be the best trader on earth, or pay for an indicator and be the best trader on earth. Like you got to put in some work for yourself. I myself have like a bit of just a skeptical personality. Like if somebody says something's too good to be true, like I'm not the type that buys in. I'm the one that's like, no. But unfortunately that's kind of, so I'm trying to keep wrangling it back into your actual question, but so there's lots more opportunities, lots more software, lots more indicators, lots more personalities out there. Try to like absorb the good and use the great tools, and kind of block out all the bad stuff or avoid them as well. And then as far as the future, you asked about like the next 10 years. I mean, it is interesting because, obviously just a step back in the world, hot topics are always things like AI and stuff like that. And then translate that into the futures world. What does it mean? I mean, you see more and more people take an interest in algo trading, developing algos, all that type of stuff. I mean, I do think it will just continue to grow. I don't know though. I'm curious, like I don't know what's going to, obviously nobody knows what's going to happen, but I'm curious if like the kind of discretionary traders will get left in the dust because like myself, because like people just get too good at like letting the computer do all the work. So, which isn't a bad thing. It's just the way of the world. So, it'll be interesting to see. I mean, it doesn't feel like it's quite there yet. Like people don't like. There's it's such an interesting industry where it's like you have this influx of people who are just trying to learn futures trading.
Mm-hmm.
At the same time, they're trying to learn an industry that's evolving and changing and growing, and then you're going to have like computers and whatever else. Like how does it all come together? And I guess I'm fascinated by that, and I don't know the answer. But if I had to make one guess, yeah, I mean, I think it's like it's almost like the easy guess. But yeah, just there'll be a huger impact on AI, as far as like just the computers, just whether they're doing the trading or just like telling people like, here you go. Like me, like everything I do is very discretionary. I watch the depth of market. I watch the numbers change. If I can have a robot learn to be me and do and go, okay, this is like an opportunity where 72% of the time it works out, take trade. I'm like, okay. I don't know if I'd like that, but I feel like that's the way things are going. So,
And
yeah.
I think that it won't really change because even algorithmic trading is still emotional trading. You still have some human programming it. You know what I mean?
Yeah, absolutely. And I remember, and it's definitely, I mean, I'm sure I know there's people who are good. I mean, yeah, with algo trading, but I think a lot of people think they're going to be good at it and they're not.
Right.
There was a group of people a couple of years ago that were like heavy. They were hellbent on like developing these algos and back testing them and all this stuff. And like after 6 months, it just fell apart. They realized like, yeah, this is stupid, because they were just doing exactly that. Like the algo would do whatever, tell them whatever, and they would still screw it up because they would just start taking discretionary trades or getting out early, even though the algo said not to. Blah, blah. Like, so yeah, just the human emotions take over.
So let's give some advice to new traders. What advice would you give someone just starting their day trading journey?
Sure. So I would say I'm gonna try and like throw in some stuff that's like just not the common stuff you hear, but the easy ones are obviously take the time. So be patient, take the time to learn properly. Don't just jump in. Like just get away from the idea that you're going to get rich quick. Get away from the idea that you're going to be successful overnight. I'm kind of telling people a lot of stuff not to do, but don't think like I just said, don't think someone else is going to like be your like you can't just like buy a course or buy an indicator and be profitable. It's not that easy. Realize it's going to be an emotional journey. The advice I would actually like tell people to actually do, and all this, now that I've said all the stuff you shouldn't do, and the stuff you should do, like I would say find my personal advice, find a product that you're personally interested in. A lot of people trade, they try to trade everything. I myself, like I'm in the camp of trade one thing or one group of products and be the best you can 100% be trading those products. Like I nicknamed myself the Ultra Bond icon. Like I know the Ultra Bond inside and out. I know next to nothing about NQ other than it moves super fast. So I focused on one thing, and that's my advice, is be an expert at one thing. Same thing when it comes to the software and whatever indicators you use, like try different stuff, but know that at some point you kind of want to focus in and like become the expert at one thing and kind of get your niche. This is the software I use, these are the indicators I use, this is the product I trade. Not every day is going to be peaches and cream. It's not super rosy, it's not super easy. But then try to go the next step and just learn, like trade, like get in there and trade. And even if it is just sim trading at first, and it probably should be for a little bit, just try to learn. Like don't just do it and go, well, I made money today, so it's good. I lost money today, so it's bad. Like, no, take it a step further and take a genuine curiosity and learn and kind of have that ongoing like thirst for knowledge when it comes to futures. And even if it's something that's not directly related to you, listen to a podcast like this, like, or go pick up a book, listen to the audiobook, whatever, watch a YouTube video, like try to better yourself. And I know people, like, it's difficult to do that every single day, but just try to, as a big picture, stay on that path of growth, and realize that it does take time, and day to day you might not see the incremental growth, but if you're able to look back in 6 months and go, oh yeah, I'm actually know some stuff now, and I'm actually a better trader than I was 6 months ago, that's like the real payoff for people. So stick with it and put in the work is my overall advice.
So if you could hop in the DeLorean and go back in time, what would you tell yourself when you first started to trade?
Good question. What would I have told myself? I would say, I think it mainly would have dealt with the patience. Like I do explicitly remember just going through the ringer that first year several times where I blew an account or just made a bad trade or lost money, whatever it was, and like being frazzled. And that's outside of my personality. Like it takes a lot to like kind of rattle my cage. And so the fact that trading kind of got the best of me, like several days, enough so that I still remember like those days from years ago, I would go back and tell myself, like, look, like you have a bad day trading, don't let it ruin your day, ruin your life. Like, yeah, it sucks, you have a bad day, but I would encourage my younger self to learn from the mistakes sooner than I figured that out on my own, type of thing. Like, and probably, like I don't, anyways, just to cut the answer short, yeah, I would just tell myself to like, I guess or maybe a better takeaway from that is just focus on the mentality and the psychology of trading sooner than later. Like I was so focused on the technicality of trading and like the numbers and I started with charts like everybody when I first started before I moved to depth of market. I was so focused on that technical side of stuff that the emotional side I didn't do any work on earlier. I wish I had done a lot more earlier work on the emotional side. So that's what I would tell myself.
So tell me, what's one mistake that you see new traders making over and over again?
Um, I gotta say it's the attachment to the money. Like, just like they are so driven by putting up a big number, that it's just like, and I just see it in their like I see them do it, but then you see that same trader a week later and they're just going through the ringer themselves because now they've blown an account or stuff. Like, you see people
Yep.
just churn accounts over and over and over. And then the next week after that, you see them super psyched again because they have a new account and they made $1,000. And it's like, you already know what's coming. Like a week from now, you're going to be upset because you blew that account because you get cocky and stuff. So, I mean, whether that's ego or it's the money, I really do think it's I think it's the money. And like they really latch on to like, made $1,000 good, lost $1,000 bad. And I mean, yeah, that sucks. But if you can just like do all the stuff I just said, but do everything I said the last hour, focus on the learning and being like great at the craft, and just the money will come. Like, I don't want to say I guarantee you, but if you put in the work, there is a huge probability. There's much more probability that the money will follow, but you got to put in the time and you got to put in the effort. So new traders, my advice, put in the effort, put in the time, do all the stuff, read the books, listen to the podcasts, master your craft, all of that hard work, the money falls out of that. Like, that's the formula. So that would be my advice.
So we've come to the end of our section so in this section here, I call this sniper questions. These are rapid fire questions. You answer with one simple answer, just right off the top of your head. First thing comes to mind.
All right. Love it.
What's your go-to trading platform?
Jigsaw day trader.
Coffee or energy drinks?
Coffee.
What is the most underrated skill in trading?
Patience.
Favorite book on trading?
You know what? I'm gonna go with hang on, bringing up my list because I'm horrible at things. One Good Trade by Mike Belfiore.
All right. And do you trade with music or in silence?
I listen to I know you wanted short answers, but I listen to music, but I listen to jazz. Very calming, nice. Very simple. Yes.
Nice. I actually watched one of your videos with jazz in the background.
Oh, nice. Yeah, exactly.
So, best stress reliever after a rough day?
I mean, it's get outside, go for a walk, go for a run, whatever your thing is, but just get outside, get some fresh air.
Man, CFT, this was great. This was great, brother. I appreciate you coming through, man. So many gems.
I hope so. I hope. Yeah. Thank you, first of all, for having me. This is great. I love doing stuff like this. And I think it's fun to it's a weird thing where it's like 5 years ago, I was the new trader, and now it's weird to be like, feel like I have this like sage knowledge I'm passing on to others, but hopefully there's some gems in there that people can use and just, So no, thanks again. This was fantastic.
Oh man. Each one teach one, man. This is wonderful.
Exactly.
So guys, man, I thank you traders for tuning in to the NOFOMO Podcast, where we discuss keeping it cool and adapting to today's everyday changing market. If you enjoyed the podcast, make sure you hit like and subscribe, and so that you don't miss out on the future drops. We've got plenty of insight coming your way. Until next time, stay focused, stay disciplined, and remember, when it comes to trading, it's best to have no FOMO. Y'all be cool, and catch you on the next one.